Going back to what you just asked me too, like what I learned, 2010 taught me to never ever again be without having access to the equity in my properties. I will never be in that situation again. Our income fell so much that we literally could not qualify to refinance the amount of debt that we had on the house for any type of a mortgage. It just wasn't available.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Ron Bork with CMG Home Loans. Ron's based out of the Tampa area, brings 4 decades of experience helping people with their mortgage needs, and is currently working a lot with buy and hold investors, including with an all-in-one loan product, which we'll be talking about here today. Ron, welcome to the show.
Nice to meet you, Dylan, and thanks for having me.
It's great to have you on here. We were talking a bit before hopping onto the podcast about a number of things. I'm very interested in helping our audience learn about this all-in-one loan product. But before we get into that, I do want to ask you how you got into real estate. How'd you get into real estate?
Well, that goes back a long, long time. I like to joke about it that, when I got into mortgages, really, and I did start actually with real estate, did real estate for 1 year. I remember I put 20,000 miles on my car. I didn't sell a single home. And then somebody introduced me to the mortgage business. Maybe you do better at the mortgage business. And that was not even Ronald Reagan's second term. That was Ronald Reagan's first term. So that's how long I've been doing this business. Kind of crazy when I think about it. But I just saw that the mortgage industry was a lot more just kind of transactional rather than like real estate. I saw like you got to hold people's hands for a long period of time. You're working with them potentially 6 months, 12 months. And I saw mortgages as very, it's a tight little window. You got an opportunity to sell them on your services, and, you get them then or you don't get them, and then you move on. And I kind of like that part of it. And also the math just kind of rings true with me. There's certain things, the way the numbers work, that kind of just speak to me. I like I like working with the numbers.
I want to ask you specifically about, pivots you've seen over the years. When we talk about, 4 decades in the mortgage space, there's been so many different trends and you've seen everything. When people think this is the worst thing that's happened, COVID 2008, right? You have some perspective when you've seen it all. What's your advice for folks who may be starting out either as mortgage brokers, as agents, and they're thinking about, making a career out of this? How can people really, stay in the game for not just 5 years, but in a downturn over 5, 10, 15, 20 years?
Yeah, well, that's a good question. Sometimes, like I've been asked, what's the like secret of my success? And I just say longevity. I've been doing it for so long that, like, if I'm not good at it by now, I'm an idiot, right? So, No, one of the things that I always look back on that was made a big mistake of doing, and that was not keeping a really good database.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
I only really started keeping a database maybe 6, 7 years ago, and I think about decades of people that I could be staying in touch with that I haven't been able to. So anybody starting out, just every contact, it's probably kind of, simple to say this, but just you got to retain your contacts, keep notes on them. When are their birthdays? Things of this nature. Your that becomes your audience, and the bigger you can make an audience for yourself, I think the more success you'll have in the future. So that I think that's a big thing that I've learned. And also, you look at different things where the market is very not volatile, but it definitely goes in cycles. And
Yeah.
so, I've had periods of time where, money was a little tight. I mean, especially going back to 2009 and 10, the credit implosion and all that. That absolutely changed my life that time. And quite frankly, what I do today is a direct offshoot from my wife and I almost losing our house, losing pretty much everything. We owned a mortgage company back then. We were using a HELOC just to keep the doors open on our mortgage company. We lost 25 loan officers in a matter of a couple of months. It was incredible that period of time. And I learned a lot of lessons, I will say. And so with cycles, when you have a big audience that you can reach out to, it kind of levels out those cycles. You got these loan officers that they make a ton of money when the refinances are happening, um,
Right.
and they make very little when there aren't. And that's not a good way to operate your business, right? So always be creating your audience.
I do want to ask you about that time period because I've had so many guests on the show who will mention, there were people really making money hand over fist in the mortgage space and throughout the country pre 2008, and then it was like the gate gets shut. The lights go off, and you see so many people who may have had cars, multiple homes, all the fancy things, and now they're losing everything. It feels like, not to say that that couldn't happen again. It probably would be a little bit harder now post Dodd-Frank, but uh, for folks who are looking at scaling a business in the mortgage space, is there anything that you would tell them, what to do or not to do to avoid that, or is it almost inevitable when there's going to be market shifts?
Yeah, there's that market shifts are inevitable. They will happen at all times, and you kind of got to get when the getting is good, But if you have money when the market takes a plunge, and then you can go in, you just think about it. Like if you bought houses in 2010, 2011, if you still have them, you're probably a millionaire now. And so again, it comes back to longevity, how long you do something, right? But if you could buy assets that, pay for themselves, they don't even have to generate income. As long as they can cover their own nut, it will appreciate over time. Even where we are, we're so high, but I would be really shocked if values weren't even higher in 5 to 10 years.
Yeah, I think the buy and hold strategy. No one that I've had on the podcast says, "Yeah, man, I really wish I hadn't held that property that I bought in 2000." No one. It's the opposite.
Yeah.
I do want to pivot here, Ron, and ask you about this all-in-one product. And we were talking before the show about how people don't even know. I wasn't aware that this was an opportunity for folks.
Yeah, yeah.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Going back to what you just asked me too, like what I learned, 2010 taught me to never, ever again be without having access to the equity in my properties. I will never be in that situation again. Our income fell so much that we literally could not qualify to refinance the amount of debt that we had on the house for any type of a mortgage. It just wasn't available. So I'm like, I'm never going to be in that situation again. So right away, you think in terms of a HELOC, right? I think everybody pretty much knows what a HELOC is. It's typically an open-ended credit line that you could put money in and you could pull money out. The thing is, most people don't know how to properly utilize a credit line. They don't recognize the fact that they could push all their money into that credit line to dramatically lower their interest charges, and pay it off super, super fast, knowing that every penny they put in there, if they need it or they want it, they can take it back out. And so the all-in-one loan that I work with utilizes an open-ended credit line mortgage as your first mortgage on a property, and it is tied with a checking account, okay? And the two accounts work together in the background. There's no management whatsoever once it's set up, and the setup just means ideally you'd like your direct deposits or any income going into that checking account. The same day that the checking account receives it, it hands it over to the credit line. We call that a sweep. So it gets swept over to the credit line. Now, the credit line, to calculate its interest charges, uses a daily balance. So literally, it'll take the interest rate on the loan, divide that interest rate by 365 days. So that's your daily interest rate. And that is applied to the balance at the end of each night. So the sooner I can put money into that loan or into that balance, the balance will be lower, and therefore my interest charges will be lower. So what the loan does, and that's why we call it an all-in-one loan, it combines checking, savings, and your mortgage into one loan product that you can now pay down really, really rapidly by using all your cash or some of your cash, most of your cash. It's really up to you. Um, for investors, if they have a rental property, they get their rent in the beginning of the month. That's helpful. I'm going to get my rent. I'm going to deposit into the checking account. That very
Yeah.
night, it gets swept over to the line of credit. Now, the line of credit being open-ended means that when the checking account needs money because you paid a bill, it'll just pull it from the line of credit like a big fat overdraft account. And so it just keeps working like that for, in most cases, this loan stays open and available to you for 30 years. So that means you have access to some of your equity in your property for a 30-year period, which is pretty incredible.
So, how quickly are people typically paying these off?
Company-wide, and we do a ton of this business. Um, CMG Home Loans is a very large company. We have over 2,000 loan officers. It's not a small company. So we do, I don't know the exact number, but I'm sure we've done over $1 billion of this loan. And company-wide, they get paid off in about 7.3 years. But I've had people pay off their loans in 2 to 3 years. Others will take longer because they're using the available credit to purchase other things, whether that be cars, vacations, down payments on other homes, rehabbing other homes. As you're paying it down, you're getting it's like a 2-for-1, because for every dollar you put into it, now you're saving $1 the interest on that dollar, and you're creating a dollar of available credit. So you're getting two advantages by putting money into this account.
I want to discuss differences for myself, but also for folks who may not be familiar with the difference between this, refinancing, also this between maybe a traditional HELOC. Can you break down some of those differences for us?
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
So, a typical HELOC is going to be in second position behind the first mortgage. Um, they require an interest charge, and they typically will stay open as a credit line for 10 years. At the end of the 10th year, whatever your balance is, it'll now amortize over the next 20. So that's not a good position to be in. Now you're just in another amortizing loan. You just created two payments for yourself, right? So the all-in-one replaces both of those. It says there's no need to take a first mortgage. For what? What you think about, how are these mortgages sold to us? For a stable monthly payment. That's the big sell. Okay, so my payment never changes. Well, I mean, I don't really see how that is so popular. It's been sold to us because it happens to be probably the most profitable banking product that lenders have. So they want you in that loan. Plus, there's a giant secondary market for those loans, Fannie Mae and Freddie
Yep.
Mac. So they know they could just sell those loans, boom, and you'd be done. This loan is different in that people really, first off, nobody refinances this loan. So that's another thing with regular mortgages. They force you to refinance for 3 or 4 or 5 different variables, right? You want a lower interest rate. Rates have dropped. You want a lower interest rate. Or I've created enough available equity in my property now, and so I want to do a cash out refinance. Or I paid enough that I want to refinance to a new 30-year loan to get a new lower monthly payment, right? So people are always refinancing these loans. What they're not realizing is they're starting the clock all over again. And the total interest paid, which is something lenders very rarely bring up, they don't really want you to know the total interest that you're going to pay over that period of time. With the loan like this, because you're paying it off or can pay it off so rapidly, it tremendously reduces the total interest that you wind up paying for it. So why are we sold on, I'm going to get a mortgage at 6.5%, but I'm going to take a 30 years so I could put money over here into my savings account that's going to pay me 3. How does that make sense? Why not
It does.
pay off the 6.5 as fast as possible so I have all my money to be able to be invested? That's the better way to go, but it's less profitable for lenders. So that's not the narrative. That's not how we're sold things. We're sold on borrowing, go for the lowest interest rate and the lowest monthly payment. And what that does is it gives you the largest amount of total interest that you're going to wind up paying. So this loan changes all of that.
Very interesting. There's so many follow-up questions and ways that I could go with this. We are coming up on time. I do want to ask you a question though. When you're seeing folks look at this product versus some of the others that were mentioned, is there one specific reason? Hey, I want to use it for investment. Do they like the ability for them to use it for multiple purposes? Is it a lot of folks who are real estate investors? Is it a lot of folks who may not be real estate investors, or is it a mix across the board?
It's kind of a mix. Most of my business is primary residence. And, for real estate investors, they want this on their primary residence because they want to pay down their house. They recognize, reducing the total interest that they're going to pay is positive. But at the same time, they're creating available credit. I used mine in that way when COVID first hit. I recognized, it wasn't going to be harmful to real estate. It was very helpful. My son came to me, wanted to rent a house with a couple of buddies. I looked at how much available credit I had. I did the numbers. I reckon, back of the napkin kind of thing. But I saw that I could finance 100% of the purchase price of that house, give them a reduced rent, right? Because I'm not looking to make money off my son on a monthly basis. I was looking for the appreciation and some tax benefit. And over 2 years, that house appreciated greatly. It was in St. Petersburg, like we talked about earlier, and it did really, really good. And 2 years later, I sold it, made almost six figures on the flip. And then when that sold off, when I sold that property in January of 2023, there was enough there that I not only paid off the other 75% that I borrowed for that house, but I also paid off what was left on my house here. So I've been mortgage free. Well, I shouldn't say mortgage free. I should say payment free, because I have hundreds of thousands of dollars in available credit. And I am looking at real estate and things. I want to utilize those funds. And that's something that just goes away for people that get conventional mortgages. They don't have those options. So this is kind of like a cash management tool that you could use on your primary, on a vacation home, or on your rental properties.
That is incredible. If it was just on the primary, I would say that's phenomenal. But the fact that you could use it on rental properties and take advantage of the equity there is outstanding. We are coming up on time here, though, Ron. Where can folks go to reach out to you, to get in contact with you, to learn more about this product?
Yeah, so my website is Mr. HELOC, MRHELOC.com. And my calendar, if you ever want to book an appointment to just talk to me, I'm willing to talk to pretty much everybody. We do these loans in all 50 states. Only residential, guys. You do have to have good credit, 700 credit score minimum. I like to say, like I said to you earlier, Dylan, that, this is for people that are doing pretty well. They just want to do better. It's not for people living paycheck to paycheck. It's not people with credit issues. You got a clean financial house and you just want to do better. This is awesome for you. So Mr. HELOC, you can get some more information on there, MRHELOC.com. And my calendar is Ron Bork, RONBORK.info. And there you'll see my calendar, and you can just book a call right there. I'm happy to talk to you.
Ron, thank you so much for coming on the show here today.
My pleasure. Thanks for having me. It was great.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.